All right. Good morning, everybody. So we're going to get European CPI this morning, or excuse me, Canadian CPI this morning. Had a number of banks come out in the last 24 hours, really kind of hammering down on this idea of a recession, both here and in Europe, and a pervasiveness of weakness. Now, kind of keep in mind that, whether it's HSBC or, Bank of America, one of those others, if they're shouting from the rooftops that we've hit a top and that we're going to see a lot of weakness and you should prepare by lightening the load, they got to convince you not to go long because they need you to sell so that they can buy it. Same thing in reverse, right? When they're trying to unload, they need you to buy it. So we do got a lot of European central bank material coming out today. Then we get into Canadian stuff, and we got a little bit of US, including additional auctions at lunch again today. If you look at the impact schedule, Bank of Canada Consumer Price Index, so the CPI, high impact. The ones in the US, I mean, they have a little bit of weight, but it's not showing that it's anticipated to be too impactful. The good thing is after the 1 o'clock auction should be good to go into the afternoon when it comes to your 0-day trades. So US dollar Japan, we're still inside weak. That high that we set last week was broken already, but we weren't able to keep it and we came right back in again. So we want to continue to watch this, see if it's going to, be able to break out here or not. If you're interested in trading gold, silver, miners, then you're really going to want to keep your eye on this. A rejection and a break back down into this wedge, that would be really bullish for your gold and silver and miners and all that. And one thing to keep in mind is that a rising wedge generally breaks to the downside, right? So we would expect it to break down, and we would measure this to determine how far it would fall. The thing is, sometimes with these rising wedges, you'll first get the topside breakout. That's to lure in all the bulls, and then it'll dump, right? So you get this kind of a blow off top first, and then it dumps. So the fact that we broke out of the top of that rising wedge wasn't really too much of a surprise, but it still needs the follow through now, right? It still needs to get back down inside the box. So when it comes to US dollar Japan, 50% of last week is important. Really want to keep our eye on that level. That'd be like the soonest we could get in with any sort of signal behind it. Obviously, we could just, try to take it right off the top, but going short off the top without a signal is just us assuming or hoping for that fade without actually having anything fading yet. So if you're looking for a signal, 50% of last week would be the very first short signal. Otherwise, breaking back down into that candle's range, that would fit for a short signal, or breaking completely outside of last week's range, which would be all the way down here. So any of those three would be a good starting point. And if you're not interested in trading the pair, which I know a lot of people that just don't want to trade the Forex, you could think about trading gold, right? So you go long on a breakdown here, or you could think about trading the FX pair, right? There's a ETF, FXI, FXY, right? So you got opportunities to trade through the ETFs. Just notice it would be long here if you wanted to short US dollar Japan. Because this Invesco ETF is inverse of US dollar Japan. So if you're going to think short here, then think long here. All right, US dollar China, same thing. We already had a breakout on the week, but we weren't able to keep it and kind of came back inside. The thing is, it's still bullish, right? There's absolutely nothing on here that implies weakness. And even the fact that we opened it, gapped down just a little bit, is a positive thing. It makes me more bullish than bearish, right? I'd be more bearish if we had gapped up and then fallen. So we want to watch this, see if we're going to get that breakout. Consider all the trapped traders from back here and the liquidity that still resides there, or the unfinished business. We managed to punch through the proximal line, but we still have the distal line to deal with. And it ends up forming kind of a squished cup. All right, so we're looking at the ZB here, the 30-year, and week number 5, or week number 4 after setting this big week, we're still IX10, can't get out of our own way. Look at the trading on each side of this, right? Those long wicks above and below. This thing is winding up for a really big move. Using OCR, we are getting smaller candles, lower highs and lower higher lows. Now we're getting these last two are higher highs, and then these higher lows and a higher close, right? So it is intonating, love that word, first thing in the morning, a topside breakout here. I just seen something pop up from Seeking Alpha on this ECB retreat. Could be something worth reading an article on if you picked up that Seeking Alpha big discount that they ran at the first of the year. It's crazy cheap. All right, so Europe for the week, inside week breakout. It's still holding, but they are up off of the bottom. kind of a real big wait and see so far, right? They haven't really expanded. They haven't really broke down all that much. Or inside a week breakout, but just barely. So we need a little bit of follow through here. See if it's going to recover. That would be like a micro double bottom. Otherwise, it's an H pattern. And, you know, Resnicek always liked to say that those H patterns was an acronym, hell for shorts. But just like with a double bottom being a bear trap, it still needs to follow through. And when we get a breakdown in a situation like this and it starts to fall lower, we still have that question to ask, is it really just a double bottom and it's going to rally back up, or did it really break the range and we're headed to the downside? You gotta bring in the flows and some measured moves. Maybe get the magic 8-ball out or something. All right, TLT is reflecting the same thing as the ZB, a lot of compression, IX10. We see that we're gapped down this morning, continuing in that bearish posture. But look how each side has all of this activity, right? That nobody's been able to win. And after all that effort and all that trading and all that money put into this, it hasn't gone anywhere. So we really want to keep our eye on bonds when they go. Oh boy, it's very likely going to be reverberating throughout the marketplace. So you want to kind of see it coming, right? You don't want to suddenly see the S&P start to move and start scrambling, looking for news, trying to figure out what's moving us, and miss the tell that came from bonds. All right, volume is a little light this morning, but it's not too much of a surprise. We got a lot of economic data on the table, and it's global economic data, right? News from the ECB, news from Canada, and we're measuring overnight volume, and it makes sense that the overnight volume is light, considering that it's global volume that we're really looking at, right? And the fact that they're sitting out waiting for the data makes perfect sense. We all do the same thing when it's our own CPI and FOMC and PPI. So light volume this morning, but it's understood on why it's light, so it's not a big deal. If you were to ever log in and see the volume really light and there wasn't anything on a table to explain why the volume is light, then you would want to be concerned. You'd want to know, why is everybody sitting out? What are they waiting for? Now, I've had that happen to me, and when I went digging, what I usually found is that a nation was closed and they just didn't have the volume because they weren't open for trading. So usually it's just a simple answer. It's not very often that you find that there's some big thing that suddenly just showed up that's causing traders to sit out. Uncertainty generally brings volume up, right? Not down. So the example would be when that ship got stuck in the canal, right? That was an uncertainty, and volume increased during that event. It didn't decrease. So, all right, we don't have an MDP because we have moved through the daily pivot point. We are back inside the previous week. I say that, but hold on. We got the previous week low here. All right, we're still outside the previous week. That makes more sense. Now we do have the 20 period daily moving average underneath this. And this is kind of the old thing about moving averages that newer traders really get hung up on. Should I use the simple or should I use the exponential? I promise it doesn't matter which one you use. But the thing is, as soon as you see one, put the other one on. Because if there was a dominant group where one side was in complete control and they said, we're always going to use the EMA, it'd be a simple thing. We would all just use the EMA. Unfortunately, half the traders out there like the EMA and the other half like the SMA. And like religion or politics, you really don't want to argue with those people. They're not going to change their mind. So you really want to kind of look at both. If you see that we're near and we're going to hit one, in my case, it was the SMA, you got to kind of wonder, where's the EMA? And if you already have the EMA, then kind of got to be wondering, where's that SMA at? Times where it really pays off to do that kind of thing is the August high of last year when we tagged that 200 period moving average. Y'all remember that? Because I do. I made a mortgage payment that day. That was a really, really great trade. So we have that underneath this. We want to know where it is in case we continue to break down this morning. We'll know and we can prepare for it. Now, depending on your platform, you might not be able to put daily moving averages on your intraday chart. But if you're on Thinkorswim, you can do that. So there's the daily EMA and there's the daily SMA. I got to say that EMA is mine. It's custom. So you'd have to go into the Thinkorswim workbook, dig it out of there, and then you'll have an EMA. Otherwise, Thinkorswim comes with an SMA daily, and it doesn't have to be daily, right? You could choose whatever you want. And if you don't have that, the simplest solution is to go out to your daily chart, mark where that 20 period moving average is with a line, and then just go right back down into your smaller time frame and let that line represent that 20 period moving average, because it's not going to change very much on a minute by minute basis. You might have to go update it once or twice through the day, but otherwise it'll get the job done, right? And that's so the label is off here, not a big deal. Oh, no, I broke it. That's why we can't have anything nice. Put that back to where it was. All right, there we go. So we have the 20 EMA above us, and should have the other one below us. Oh, I just got it. They're both right down here. 43.66 and 43.63. The SMA is just a little bit closer. We'll make it stand out differently so we know which one is the SMA. So we know if we continue to move down this morning, we're going to tangle up into those 20s. If we do make a move back up, we're going to tangle up into the 10s, right? So we got the 10s overhead and we got the 20 underneath, almost like a pinch maneuver. One of these is going to get hit, right? And the only way it's not going to get hit is if we stay inside yesterday's price action today. If we manage to do that and we don't get an inside day breakout, then we're going to get away with not hitting a moving average today. If we break outside of yesterday's price, we've got the 50% mark, 4,400. And then once we get past the 4,400, then we've got that 10 EMA. And it's the same thing as what we did earlier. If you know you're going to hit the 10 EMA, you're probably going to want to know where that SMA is, or vice versa. Otherwise, this morning we are forming a really nice double bottom. It's not there yet, right? But I'm a big fan of not trading where we are and instead planning ahead to trade where we're going to be. So yesterday's low is down here, 43.68.5. It's the RTH low. And I swapped over to a 5 because I kind of wanted to see if there was a drop base rally in there somewhere, but it doesn't have a nice leg out. It's more of like a V shape, especially if we were to go into a smaller time frame. So, trying to mark out the proximal line on this, it really isn't worth it. Identifying these liquidity zones is all well and good, but being picky about which ones you use and kind of just discounting the sloppy ones or the ones that don't look like they're going to have the follow through helps eliminate those trades, right? Something I talked about before. If you want to increase your win rate, decrease your loss rate. Don't try to add more winners. $10-day, 30-minute volume profile. When we're at the low, we expect to go to the high. When we're at the high, we expect to go to the low. We are nearly at that low. As the day wears on, we're going to drop off this last bit of volume down here. And when that happens, the low from yesterday is going to be the bottom of the volume profile. And from that, we're either going to be suddenly at the low of the profile, or we're going to break down and expand the profile lower. It still implies that we're near a turning point. Or that we're going to hold within the shape of this profile enough for it to expand to the bottom and then wipe out 10 days of highs until suddenly we have a top, a new top, right? Either way, just kind of keep aware of the fact that as the morning wears on, the bottom of the volume profile is going to be front and center. It will be yesterday's low, right? So when we come in tomorrow, if yesterday's low holds, then the bottom of the profile will be at 43.68. All right, marking out the 5x5, we still have that VPOC overhead, and we've got 2 to the downside that need to be dealt with. Should we break outside of yesterday's low and we get through the roundy, I guess we don't have to worry about that rounding. 43.50 would be the target. That'd be the second VPOC down here. We don't have anything to carry forward from last night. So, no VPOC today. And looking at where we're at on the week, so far it's a pretty muted week, right? We don't really have that much here. We didn't do this yesterday. But there's the size of last week's range. And there's the size of this week's range. So this week is just a little smaller than last week. They reduced the volatility just a little bit. All right, when it comes to thinking about this sell-off that we've had over the last week, we haven't really gone anywhere, right? If getting back to the 10 is like getting back to the center of the basketball court, then from the center of the court, you could really go either direction, equal distance. You're not overbought, you're not oversold, you haven't gone too far, you're right in the center. So we're just past the 10 to the downside. Barely, not even a 0.5% yet. We're definitely not oversold. We definitely haven't moved too far too fast. And this doesn't owe us a reversal at all. It is worth noting that when the market is moving strongly to the upside, it tends to just come back and cross through, get a little bit of a crossover below zero, and then we begin another cycle, right? Think about that blue line in the background, that wave cycle. So with that in mind, if we were to follow that form, then we're very close to a turning point where we would expect the S&P to first get back above the 10 and then begin a new expansion beyond the 10. All of that was for the 10-day. For the 10-week, we're still holding above. And in fact, we're sitting at around 2% above the 10-week. But we are on the downside of that. And, considering the waves here too, we would be looking for at least a touch, getting down and touching to that 10. Right, it's kind of the idea. So if we're on our roll back up, then we're going to be expecting another cross down, or at least get near that 10 before we begin the next move through to the upside. All right, so this is the 9 grid sector that we use to kind of keep track of your risk on, risk off, and midline sectors. The top ones are risk on, the bottom ones are risk off, and the 3 in the middle are midline. In every one of these charts is a white line with dots. It's a linear regression line. Think of it as the mean or the average. but also think of it as what direction it's pointing. Is it sloping down? Is it sloping up? Is that slope aggressive, or is it more of like a gentle slope? If you look at XLF, it's pretty aggressive, right? Nearly running from the top of that rectangle on the left to the bottom of the rectangle on the right. And that makes sense when we had those banks imploding and they were just getting shorted really hard, right? A little bit of a financial crisis. But it stands out as the one sector in those three risk on that is negative, right? These other two, they're doing pretty good. Consumer discretionary, which is mostly just Tesla, isn't pointed so sharply upward as technology, but it's still doing pretty good. And then you've got your health, right? The 50 over the 200, that's considered healthy. Price over 50 that's over the 200 is as healthy as you could get. It's a good, solid, healthy chart. With that in mind, the XLF isn't above the 200 and the 50 isn't above the 200 either. So it's a work in progress. It's healing. The fact that it's negotiating with its 50 right now, it implies that that work is getting done. If we were to start a new Linreg line from this low, kind of drag it across, we can see the start of something, this changeover, right? Where it's trying to heal. It's got a long ways to go. Eventually, I'm sure, the financials will come back. But there's still a lot of threat to a lot of banks that just managed to hold on for a little bit. So if you're getting into those banks thinking they're really cheap and that eventually it'll turn out to be a nice payday, be very picky and particular about which banks you're picking on that bottom fishing expedition, right? Because some of them are not looking too healthy. All right, industrials XLI is basically flat. I mean, that's a pretty good line. But we are getting that breakout. So, we had the February highs. We retested it in March. It sold off hard afterwards. Finally got that breakout again, and it looked like we were going to get a Busby and keep it, and we fell right through. The thing is, overshooting isn't necessarily a surprise considering the kind of environment we're in right now. So I'd say look for maybe a TRB on industrials. If we can get a TRB set up, we could easily get back above that 105, 106 and test a new high on the year. So even though the Linreg line is basically sideways, you got to just think about how much data is here, right? It's got a lot of work to get through. The chart is still bullish, bigger picture, but we'd have to dig down more into, is there an expectation that industrials are going to do good if we continue to see the moves that we've seen in the dollar and in yields, right? But just the chart alone, we got a good backdrop on the chart. Nat gas is getting punched in the face again this morning. A lot of the other energy names, XLE, oil services, OIH, they're not doing too hot either, but they're not down enough to really hit my benchmark. So we need to see more out of more weakness or more recovery. K-Web is doing really good this morning, which makes sense. China came out with that stimulus talk again this morning. So, pump it up. So we're up more than 2.25. Being up in this should give a little bit of boost to things like JD, Baba, Baidu, PDD. Yeah, nice little pop up on PDD. Inside day breakout. Now it just needs to keep it a little bounce off of yesterday's high for a rally would be a good starting point. JD, same thing, gapped up, but that, I don't know, that looks more like an island reversal than anything else. Think about this gap down and how it stayed in that tight little range until the open, and then it really fell. We'll flip all of that over. Big gap up. If it was to hold here, just a really tight range, and then it goes into the open and it shoots straight up, just like this shot straight down. That would put us at around 36 and 36.5, 37. If you're looking at that though, I mean, I'd run that thing tight stop. I would not be forgiving with it. All right, Baba, the same thing, little wedge, but it's all really just sitting inside of this really big candle. If we can break that Globex high into the open, it would be like breaking above Thursday's high. You got a nice run up to Wednesday's high, maybe Tuesday's open. And Baidu, same thing, a lot less flow. If you look at those candles, their lack of shape. Some of these names are getting the move more from probably algo than anything else, right? Because it really just doesn't seem like it's getting a lot of a flow out of it. Arbitrage. All right, as inspected, we're seeing a little bit on the gold side, but not very much. I would have expected a little more. Same thing with jets, uranium, bonds, all in the flat range, right? There's nothing really picking up on any of those. It's a really nice rising wedge example and how they break down. That's on XOP. Behind the K-Web names, we also got Bitcoin. Now that thing has really made a run over the last few days. So you got to kind of be worried about that $18 high. seems to be a level that it just hasn't been able to get through a constant fight. We did get that gap closed, but that's it, right? I don't know if this other one was a gap that got closed or not. Oh yeah, it closed the other one. So the next gap close is somewhere around 19 and a quarter. It's not a really great line there. There we go. 1936. Long ways to go from where we were at. So looking at it, K-Web, we don't want an S&P NASDAQ rally based on, that alone. We've got to have something more than that. Bringing in the Bitcoin, okay, I mean, that helps out a little bit. Bitcoin's got a plus 70% correlation to the NASDAQ. So, we're likely to get a little bit of love there. Still kind of feels like we're coming up short. We need something more than that. We can see the SMH, so semiconductors are getting a little bit of love this morning, but it doesn't really seem like that'd be enough, right? It would have such an expansion already in a lot of those semiconductor names that how much more you think they got in them? So looking at the chip names, AMD is doing the best this morning, and that's not even a 1% move. NVIDIA and AVGO both sitting better than a 0.5%, but not much above that. And then the rest can't even hit a 0.5% this morning. So sure, chips are up a little bit, but they're not awe-inspiring at this point. Airlines are getting a little bit of attention this morning. Amazon and Tesla, two of the FANG names, they're both up more than a 0.5%. But some of these comeback kids like General Motors, Ford, HD, Dollar General, they're not coming back this morning. Really not getting much out of them. All right, so I'm looking at the Amazon here. Nice run to the upside, nearly like railroad tracks. But we've got two moves or two things that are a little bit of a cause for concern. One is the really big expansion bar. We had one of those back here, May 26. That really big, just monster candle that got it all the way back to the top of the range plus some, right? Kind of zoom in a little bit so we can see it better. So I'm talking about that candle there and the outcome from that, right? We opened, ran, broke the top of the range plus some, kept right on going, and then we had that nice move up. Took a little bit of a pullback. We've been chopping around, doing a whole bunch of nothing. Had a TRB, really big expansion bar again. But the difference between the last time and this time is after we had that big expansion bar last time, price was able to stay above the breakout point cleanly, had one down day, and then just a nice continuation. We got nothing here after that really big day. All the price has been inside. None have been to the outside. And now we're trapped inside this little itty bitty doji candle. So this sucker's going to make a move today. It really seems like that's the primer. Got a little bit of a resistance for this thing to make its way back up. Yeah, glad I came over to Thinkorswim to check that. So what we have here with that little doji candle is not what we have when we take it over to Thinkorswim. And that's because unlike Thinkorswim, TrendSpider is actually showing us that daily in the pre-market. So that little doji candle is this. All right, so for Amazon, a breakdown outside of yesterday is going to be a break below that 10. And, looking at how it's been doing, ride the 9 or ride the 10. So, it's been a bump and go until just recently, where instead of bumping and going, it's been kind of just dragging along it. And we did have that big up day that I talked about, that big spike up, but it just wasn't enough. We didn't keep going. And look at the MACD. On that big drop down day, even though price rallied back up and really tried to keep it all in line, this thing's been rolling over. Then we had the crossover. So primary uptrend, secondary downtrend with momentum decreasing, or with negative momentum increasing, kind of say it that way. So if you're looking for a short on Amazon, got to kind of put it into your own time frame. A short duration short, something for like next Friday's options. Then a breakdown outside of yesterday should be a good place to start. The target would be 125 because we got to interact with that 20 period moving average. Just remember, these moving averages, they're not support and resistance, right? They're more of targets and lines and of areas of interest. We have an expectation that there's going to be a lot of trading when we get around that 20. So a lot of volatility, a lot of volume, some strong flows might give us a directional bias when we get into it. but we don't want to just look at those lines and consider them as any form of support, resistance, nothing like that, right? All right, this is my homemade little ETF for the FANGs. Right, it's got Google, Apple, Amazon, Microsoft, Tesla, Meta, AMD, Snow, Nvidia, Netflix, all of those combined into one single chart. We can see we broke the 10, we hit the 20, interacted with it yesterday, both of those 20s. And below that is just a real long drop down to the 50. Now, the numbers that we're seeing here on the side, this 2550, 2500, though they're just, it doesn't even matter what the numbers are, right? Because this is a collection of all of these names. So don't try to look at those numbers on the side to give you any kind of idea. It's more about structure, right? Are we coming into a support level from a previous price structure? Are we hitting resistance from a trend line, something like that? And with that, I mean, we got nothing so far. This gap up this morning is just getting started. For any kind of a rally, it's got to work its way through all of yesterday's price action. And that's a lot to work through. Here's the real NY FANG. Rather than looking at my little homemade ETF, it doesn't work in the pre-market. That's why we use the one that I made. But once the market's open, this is the way to go. Just look at this thing. So for any kind of move up today, you could see that yesterday finance wasn't enough, right? Finance was gapped up. It held VWAP through most of the day, and it just wasn't enough to help the market. We need these tech names to either not go down or start to go up. Not going down would be a good start. Just holding the line. It doesn't have to rally. It just needs to quit falling. Then finance would be enough. All right, Meta got that crossover on the 10 yesterday, and this morning got a little bit of a rally back up. So we want to see if this thing's going to make it through there or not. If it does, it's another retest of the 10. All right, like just a good strong ride the 9, ride the 10 kind of play. Got to say, looking at it, how far away it is from those major moving averages like the 200, and looking at it on the 10 with the 10 week, we're still a long ways off. Having a little more digestion wouldn't be bad, but I mean, on a weekly, this thing's not bearish at all. Most of those names that we've gone through aren't bearish at all. So we want to see the momentum come in here on a lot of these names that I've shown this morning. They're inside day, and the day that they're inside of is a really big day, right? Usually what is going to happen is we'd spend 2 or 3 days grinding our way back up out of that if we turned bullish. You don't want to be in a trade where you bought calls that has to grind its way up through this, right? There won't be momentum in that move, and those calls are just going to get eaten apart. All right. Bonds are getting a little bit of attention this morning. We'll circle back to that and kind of pound the table. We want this 20 period crossover and then a challenge of that 50 EMA at 105. It's a nice round number. 103.75 is an area where it gets hung up a lot. It might as well just have a couch at that location because it spends a lot of time there. So let's get above 103.75. If we can, we'll target that 105 as a swing. As a level, I don't think it's going to get through anytime soon. You're still building this base out, and the 50s still needs to turn, right? And we're so far away from that 200. All right, so here on the daily rather than the weekly, that 103.75 is basically yesterday's high. Again, it's a line that, it struggles to get through just like yesterday. So we want to get through that first. Then we'll focus on top of the range, which is 104, and then an expansion beyond that 104.5. And like I said, that's if we can actually keep it. Well, I guess we'll see. The main thing with the bonds, now that we've gotten a little bit of shake and bake here, unless they start to move really fast, they're not going to be our issue at this point. They can run all the way up to that 1010 or fall all the way back down to 100. It's not going to be a big deal either way. If we get below 100, then we got something to worry about. And if we can get above 110, we got something to worry about. Otherwise, I think just keeping your eye on them to make sure we don't get any really big, fast moves. Because big, fast moves, kind of like the moves that we saw yesterday, that can have some weight behind them, right? Day like this, you don't want to see those kind of rip your face off kind of moves. Same thing with TNX. As long as we're under the 3.9 and above the 3.3, then not too much of an issue. It's worth keeping your eye on just to make sure we're not getting any kind of explosive, really big, crazy moves. But otherwise, and we really want to see US dollar Japan give up more, right? And it's not yet. Even now, while I'm looking at it, starting to get some push again. We can see these defense here, long wicks each side. Using OCR, we are getting higher lows. We were getting lower highs, but that changed today, right? We got that higher high. So a higher high and a higher low, and so far a higher close. With this US dollar Japan, I don't think we're going to have any real impact in this until we get back below that 142. So as long as we don't break out, call it that 144. If we don't break out above that and we don't get below 142, then it's just going to be more of that sideways same. And the rest of it just comes down to keeping an eye on the news, watching the clock, And be careful, be safe. Have a good day.